Test, 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 test. Okay, this should be up and running. Hello, 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 hello. Hi all, and welcome, welcome, welcome to another edition of TraderCast, a live trading, key trading levels for popular markets. Let me just see. Okay, this is all working okay. Hi all. My name is Phil and I'll be your presenter today. This is a little bit about me. If you're looking for the community of traders, check us out on TraderCast.com. If you're looking for the education, you can find some of my training courses on mytradingskills.com. Some of the courses are completely free, so sign up, see how we teach if you like them, and if you need help with anything else, let me know. Over the past 10 years, I had the privilege of speaking in front of various different industry events, and I had the privilege of teaching many people how to trade. Some of them were brand new and some of them were intermediate or a little bit more experienced, and they needed help with a specific area of their trading activity. Here is the big disclaimer. Obviously, anything that I say here should not be considered to be advice, although I will be showing you some of my live trades and explaining the reasons why I want to get into some other opportunities. So this is my opinions, and these are my opinions and experiences. This is basically what I think should be a practical application, real-time, real-life practical application of technical analysis and price action trading, which an intermediate or beginner should be able to do. So nothing complicated, very, very simple approach to trading there. Now, these are some of my positions. For those of you who watched yesterday's session, you know I was long S&P and I kept on moving my stop higher and moving my stop higher, and then eventually I was stopped out at 43.20 with a profit. So I'm really happy with that trade. This was an exceptional trade. Really, really, really happy with that trade. Yesterday we were also looking at FTSE at 73.20, and I got filled at that level, so I am in that trade now. I'll be showing you that in a little bit in a few more minutes, a little bit later. I'm also long Dow from 33,300. Both of the stop losses are at break even now. I'm keeping this very, very tight because this can change very quickly. And I'm also long sterling from 133.24. If you remember yesterday, I was looking for an oversold rally to short sterling, and that didn't happen. The sterling kept on falling lower, lower, lower. So when it came to a specific level where I thought other traders might be looking to take profit, I decided to get in on counter trend speculative long sterling dollar. Okay, well that's it. That's a kind of very quick summary of where I am with my trades, and I will talk to you about some of the setups right now. So let me see, is there anything worth reading? US futures rose with European stocks after the Ukraine said it might hold a second round of talks with Russia. Contracts on all three major US gauges advanced. That's S&P, Dow Jones and Nasdaq. Holding on to gains after data showing US companies added more jobs than estimated in February. Federal Reserve Chair Powell still sees interest rate hikes coming, but noted that Russia-Ukraine war has injected uncertainty into the outlook. Okay, so that's directly translating to US dollar weakness. In remarks prepared for dual appearances this week before House and Senate committee in Congress, the central bank chief acknowledged the tremendous hardship the Russian invasion of Ukraine is causing. So that's a very basic, very, very basic summary of what I am looking at from the economic data point of view. For those of you who understand economic data releases, there was a big one earlier today, US ADP employment report, which showed that the employment increased by 475,000 jobs in January. and that was a much better number than 375,000, which was the expectation. So this type of report is normally seen as a forecasting tool for that big volatility event, a crucial event for this trading week on Friday, which is the US unemployment and non-farm payrolls. So Philip, shut up about the economic data releases. I'm not here to hear about that. Just show me some charts. So let's go and do that. Okay, let's go and do that. Let me just see if we have anybody there. If you have any questions, let me know. That's all fine. So first things first, guys, I am currently long Dow Jones from 33,300, although this is the 4-hourly chart and this is pointing to a downtrending market. Now, this is a speculative counter trend oversold bounce back. Now, this type of pattern, they have the tendency to break to the downside. They have a tendency to do something like this. They have a tendency to sell off, sell off, sell off, and then do a retest from
the effective Fed funds rate unchanged on March the 1st at 0.08%.
And then you could see another leg lower. And that another leg lower would likely be this big. Okay, so from these lows to these lows, extended at the point of the breakdown, and this gives you the target of 32,970, 32,950. So I'm long, so I'm a counter trend long, and this is a kind of more speculative position because of this positivity surrounding negotiations and the talks. I thought potentially we could see an oversold bounce back, and if that's the case, let me just see, here we go, excellent. If that's the case, then we could see a rally and a breakout above this area here, 33,570, that could potentially open the way for a gradual move and then retest of this falling resistance trend
Fed
line.
Evanson says inflation is extremely high, that needs to be addressed by monetary policy for sure.
Towards here, that's where I would likely look to exit and so on, 33,800. So that's where I am with the Dow Jones. So I'm a counter trend long, but I will get out of this trade very quickly if needed. So let me show you that trade and I'll show you how I've managed it. Okay, so I'm currently long. You can see here I'm currently long 10 contracts and my stop is at break even. Okay, so my limit order would be at 33,800 initially, and then 34,000, and then above that up here 34,300. So I might be looking to take partial profits going forward. From the trade management point of view, my stop is now at break even. So my stop was initially lower down here, and then I moved it higher and higher and higher, and now my stop is at break even. So what I'm going to do is I'm going
Evans
to
says we'll continue to see strong labour markets.
Slightly higher, about 50 points at the week of this, at the low of this week here, just in the case if we do see some selling pressure and the price dips lower. I would like to get out of this trade rather than see all of my unrealized gains.
And Fed Evans says on the Ukraine crisis at the moment, there are no obvious spillovers to the US economy.
That's what I am. So currently happy with this trade position.
Just make everyone aware the US ban on Russian airlines using American airspace begins at 9 p.m. Eastern time today.
Position is doing really well, and my stop is at the appropriate level. I'll tell you if I decide to change anything soon. So the other thing that I was telling you about was FTSE, and I am long FTSE.
And Evan says we'll have to adjust monetary policy to deal with high prices.
So I'm long FTSE at the moment. And from the trend point of view, this is also downtrending market. So what I'm doing is I'm going against the trend with this trade.
And Evan says that inflation is quite a risk
from
to
the
economic
daily
growth.
and 4-hourly point of view. But you can see low, higher low, higher low, higher low, higher low, and then the 4-hourly you have high, lower high, lower high, lower. So there's a bit of a confusion. What is the prevailing trend? But if you go and check this out in an hourly, it looks quite good. And if you remember yesterday, we were looking at FTSE, and I was drawing the line possibly for a pullback to 73,020 and then a rally from there. So eventually that happened. We had a pullback, actually overshot to the downside by a bit, and then eventually went up. So I'm looking at this pattern here, and I'm thinking that this potentially could develop into a bullish continuation pattern. This could be a low, higher low, and then this is a previous resistance. So look, okay, maybe I'm not explaining this correctly, but
and Evan says the Fed needs to readjust monetary policy, so it's moving towards neutral.
So support, 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 loss of support, a retest as a resistance, breakout, and now it's newly found support. So when I see a setup like this, I'm usually tempted to go bullish on this type of trades, because it's a level that has been tested on a number of occasions, either as a resistance and support, and then once broken, it has a significance. Okay, so I got in down here at 73.20. And what I'm looking for at the moment is I would like to see if we can see a rally like that and a breakout above these current highs, and then if that happens, then potentially we could see a little retest like that, and then above that we could see another leg higher. So that's my premise, but I wouldn't like to see a dip below where I got in, which is at 73.20. So holding on to this position just at the moment, and I'll show you where I am. I'll show you where I am with that. So I'm happy with this. That's the logic. That's the premise. It's a very, very basic price action setup that played out on
just to make everyone aware, there is an M&I piece doing the rounds saying that ECB will delay rate hikes. We don't have the full piece, but it is getting some more traction and doing the rounds.
So ECB will delay rate hikes, and that's immediately translating to euro weakness. So, sorry, I'm just trying to do this. So you can see that I am currently long at 73.20, 73.20, that's where I'm long. My limit order is higher, and my stop was initially slightly below, and then I moved it higher, and I moved it higher at break even. And what I'm going to do now is I'm going to move my stop at 70.
So moving back to Fed's, Evan says inflation will come down this year and into next.
So I'm locking in about 22 points on this trade. I'm locking in 22 points on this trade. This is my unrealized P&L. This is my stop. So my stop is also my take profit at the moment. But my ultimate limit order would be much higher towards the cluster of these highs at 7,500 or even higher. So really happy with this trade. I'm keeping it on.
So Evan says even next year inflation will be down, but still closer to 2.5% than 2%. Says it will take until 2024 to get to 2%.
So So keeping this on, I will readjust it very quickly if anything changes, if I see any reversals or anything happening with the price that I don't like. I will very quickly change and possibly even get out of this trade before my stop loss is hit. And the last open trade that I have currently is a sterling dollar. So high all, just checking you can hear me and see me and everything is streaming okay. The last trade that I have open is sterling dollar, and if you remember yesterday I was looking at euro dollar and sterling dollar from a bearish point of view, and I was looking for an oversold rally into resistance for a sell-off. And then I was saying that these clusters of the lows down here are likely going to be considered to be a good profit target for anybody who is short. And this was all based on the existence of this pattern here, i.e. rising wedge. And I said this type of patterns, they have the tendency to break to the downside. And then people who tend to trade them, they have a tendency to take the widest point of this consolidation and extend that to the downside, and that gives them the take profit level. So it's not the exact science, but symmetrical move depending on where you got in, how you got in, where is the distance, where do you measure it. But this gives you a very rough area where other people are looking to get out as well. And this is basically what happened. Off it goes down, lower, and then you get this morning star reversal here, and then now we are moving higher. So what I would like to see is I would like to see a rally into this area here. Sorry, I'm using the wrong color. I would like to see a rally to this area here for another leg lower. So something like that. I would prefer to see that. But I'm currently long, so I'm a counter trend long on this trade. And I am paying very close attention to the existence of this little trend line here. You can see the wicks and wicks and wicks. There's a buying pressure and buying pressure and buying pressure and buying pressure. At some point, bullish traders who are in this trade or are counter trend traders like myself will get exhausted, and the sellers will return, and then the price will likely attempt to break through this support and then possibly extend this many points to the downside, which is this here is a very similar version of this, and this here is a very similar version of that larger rising wedge. And then that brings us to the retest of this zone down here again. So I'm going to be very nimble here and protect myself very quickly and look to get out of this trade if I don't like the way price is behaving. So let me just show you that trade as well, and then I'll tell you about a couple of other things that I'm looking at, one of them being gold, and then also I don't know how many of you actually watched yesterday's session where we were talking about crude oil being extremely bullish. Crude oil went to $112 per barrel. It just went higher. So this is my trade. Sorry, let me just move this. So this is my trade on cable. My stop is down here and I don't like it there anymore, and I'm moving it higher. So I'm moving stop to about 20 points. So I'm risking about $100 on this trade, but I would like to see if I can get a retest of 134.40, 130, 480, 135 to the upside. So something like that would likely be of interest.
Commodity news here on NTV reporting that the German government have released part of its national oil reserve.
So that's where I'm with this trade. Sorry, this is the hourly time frame. Let me just go down and move it to a 15-minute. So you can see So I'm paying attention to this structure here. This structure here is actually really, really important now. I'll keep you informed and let you know if I decide to get out of that trade. Now, I'll just quickly go. Hi, Bhavesh. How are you? Good to see you again. We already talked about S&P. We talked about FTSE. I'm long FTSE. We talked about Dow. I'm long Dow. We talked about cable, sterling dollar as well. Now, let me just show you a couple of other things that I'm actively paying attention to today. One of them is Nasdaq. So from Nasdaq point of view, this looks very bearish. There's that energy buildup, energy buildup, energy buildup, and a flush lower, and now we are seeing a retest. So previous support is now newly found resistance. From the trend point of view, this is clearly defined downtrending market, and this pattern it's forming a bearish continuation setup. So this type of setup, they have the tendency to break to the downside. They have the tendency to flush lower, maybe retest, and then carry on moving to the downside. The alternative would be a rally and a breakout above cluster of these highs, and then potentially spike into this zone here for another shorting setup. So something like this: rally, 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 and then a sell-off from here as well. So the key level that I'm paying attention to is at 14,100, 14100, 14,100. I would likely be looking to see if I can short around there or up here towards 14,200. So if I short at 14,100, my stop would be at 14,200. If I decide to short at 14,200, my stop would be at 14,300. So I'm giving it about 100 points in risk on this particular trade, with a view to take profits towards 13,700. So it's 100 point of risk for 400 or possibly even 500 points of gain. Come on, just a second. Okay, so that's where I'm with the Nasdaq. I'm gonna leave it running for now, and what I want to do is I am going to take a look at that Dow.
Some COVID news here on Wall Street Journal with a piece that China is actively exploring exit from zero tolerance approach to COVID-19. So looking into travel bubbles modeled on the Winter Olympics, this is Dow Jones sources reporting. Scouting manufacturing sites abroad to make domestic mRNA vaccines as well. So the full opening is not expected until spring 2023, the Dow Jones piece notes.
So this is a Dow trade that I'm in. My stop is above here, and what I'm going to do is I'm going to take some partial profits here, because it's not breaking out just yet. We are coming to the open. We could see a little bit of volatility. So what I'll do is I'll take some money off the table on this trade. So I'm trying to cash this in, and I'll do that right now. So I'm reducing my position size here, and what I will also do is I will also move my stop just a little bit higher, locking in another 94 points on this trade. So I took half. I feel this could spike higher, absolutely fine. I would love to let it run, but I'm happy that I took some partial profits out of this trade and moved my stop loss higher, locking in some more unrealized profits. So that's another 94.5 points on this trade potentially. Okay, it could be more, but that's where we are. I'm leaving the FTSE. I'm leaving the FTSE where it is. So my FTSE is staying where it is. I'm not changing anything there, but I'm paying very, very close attention to FTSE. Okay. So I'm not doing anything here. I might just move a stop a little bit higher, maybe 30 points. I'm locking in about 30 points on this trade, and leaving it run. Leaving it run, that's not a problem at all. And the cable, we talked about it, and I'm just gonna show you the cable again, and I'm leaving the cable as is. Okay, so cable, I'm leaving it as is at the moment. The only thing that I will do with the sterling dollar, because this is a complete counter trend trade, I will now be happy.
It's an update here from TASS that the Russian delegation has left for talks with Ukraine. It's an update on the timeline for talks now, as TASS notes that the Russian delegation is on the way to a location for talks with the Ukrainian side.
So my stop is now at break even. Okay, just in case if this reverses, I'll be stopped out with nothing, but happy to keep this trade going. Happy to keep this trade going. Okay, that's me from the trade management point of view. Babish is saying, do you ever use trailing stop? Yes, trailing stop is a good approach. You can set it in a number of points or percentage terms. You can say, I am going to put my stop loss I'm going to put my stop loss at 50 points away.
Hearing more from Fed's Evans, inflation will likely still be more than 3% by the end of the year.
From the price, and as the price keeps on moving, the stop is always going to be 50 points away from the price.
So we're just under 10 minutes away now to the bottom of the hour as we wait the US cash equity open for the day. Additionally, more Fed speakers due up, with Fed's Bullard set to be discussing the outlook for the US economy and monetary policy during a virtual event hosted by the Great Strait Louis Inc. So text is expected from Fed's Bullard, additionally a Q&A with the audience. Just a reminder, Fed's Bullard, a 2022 voter. Well, Evans as well noting that they may see moves at the next several meetings for sure.
So you can do that with a trailing stop, but what I'm doing, I'm manually moving my. So I also have a trailing stop, but rather than that being preset in percentage terms or number of points, I'm manually moving it. I feel that I'm in more control. There's a logical reason why I want to move the stop at specific level, rather than that being predefined by the price action, because price action will tell you where the next resistance or next support is. But it's a good tool to use, definitely. Most of the brokerages are offering trailing stops as well. Okay, so that's where I am with a few of these trades. So we talked about S&P, we talked about FTSE, we talked about Dow Jones, we talked about cable. Now I'm going to talk to you about gold, show you a little bit of volatility we've experienced in crude oil, and then potentially we can go and check out maybe another currency pair as well. So in relation to gold, okay, I'm on. There you go. Hopefully you are hopefully you are okay with that answer. The best thing for you to do, Bhavesh, is to place some trades in your practice account.
Sevens as well, noting that as the Fed raises the rates, if inflation deteriorates, they can increase rates more quickly.
And then do your stops manually, and then use them with a trailing stop as well, and then see how it works. Because sometimes if you're scalping, if you're trading really short term, you know, it can backfire. There's a very good and a sensible approach to placing your stop if you don't know where to place it. But I don't want to talk about it right now because it's covered in the educational courses. It's the use of a specific calculation which tells you how to work out your position size, how to identify your stop, and also it's specific to the market that you trade, because not every market moves the same amount of points. So you can have, I don't know, 50 point stop on Dow Jones and somebody sneezes on a trading floor somewhere in New York and you're stopped out. And you can have a 50 point stop on S&P and you could be waiting a day or 2 or 3 to be stopped out. So not every market moves the same amount of points in a specific trading time frame. That's even more specific. So the daily range or 4-hourly or 15-minute range, they all differ how many points the markets move. So you really need to understand what that is before you can Bauer saying, and thanks for the website you mentioned in your slide. I started with free ones. Okay, well, enjoy Bhavesh, enjoy.
It's an update here on commodity news from the German Economy Ministry that's releasing of 434,000 tonnes from their national oil reserve. Well, ECB sternness as well, noting here that the invasion creates important supply-side shock, negatively affecting output and increasing energy prices, but early to estimate impact.
Yeah, if you feel that what's available there as the resources could help out somebody else that you know, yeah, fine, point them in the same direction. It's absolutely fine. Absolutely fine. Now, so
here in the US banking panel, the spokesperson just noting that they won't be voting on Fed nominees today.
So, hey, Goldmaster, how are you? I can see you logging in and out.
Just a reminder, we're 3 minutes away from the bottom of the hour, so we have comments from Fed's Bullard at the Cash Equity Open. Again, discussing the economic outlook with a text from Fed's Bullard expected to be released.
Quite a few people in today, yeah, it's good. Mr. O'Connor, Caraldo, Robert, Stephen, Mendez, Erics, Enrique, Danny, Daniel, Alejandro, Smith. Yeah, few people in. Welcome, and let me know if are you looking at anything yourselves. I know Goldmaster was looking at FTSE as well earlier today, so good luck with that. Okay, so here we are. Gold appears to be very bullish at the moment. This is very bullish at the moment. These are the daily time frames with the candles pushing higher. 4-hourly also uptrending. So the previous consolidation here, support, resistance, support, and then becomes resistance, and then resistance again, and here, and now it's support, and now it's support. So this area down here at 1913, 1914 is actually quite appealing. My limit order was down here at 1880. So this is where I wanted to get in. And buy gold for another leg higher, but that didn't happen just yet. So from the intraday point of view, I'm also looking at this 1913. I want to see what happens if the price gets here and starts bouncing off here. Otherwise, I'll keep my order and I will likely get in on this trade at 1880. That's what I would like to.
1 minute to go now.
And I would like to take profits higher towards 1916 on gold. So no trade for me at the moment in gold. This is a little bit longer term. This is a 4-hourly time frame. Just paying attention to it and looking to see if we see anything else. Okay, so we are almost ready for the open, for the US Open. So this is the trade.
Fed's bullet repeating the call for a quick end to Fed support for economy to fight high inflation. Economic risks from the war in Ukraine likely felt more directly in Europe than the US, so expect US growth employment to remain robust, while high inflation requires Fed to follow through with rate increases while reductions to the balance sheet. They expect to start shrinking the balance sheet by the middle of this year. That's Fed's bullet there, restating the call for a quick rise in interest rates, as well as noting that they expect to start shrinking the balance sheet by the middle of the year. Comments from Fed's Evans at the same time.
Let's see if we get this tagged. So look, previous consolidation here. Now current consolidation here. So I took half of this trade already. Let's see. If I get stopped out, this is where I'm going to get stopped out, down here, with about 94.5 points above where I got in, So I'm happy with that. Okay, we could be looking at this candle for another 13 minutes or so. If anything happens, and if I want to change anything, I'll let you know. Come on. Okay, just gonna leave it here for now. So the other thing that we talked about yesterday was crude oil, and if you remember, I was saying you really need to be a lunatic to try and short crude oil at the moment, and this is the reason why. I mean, look, don't stay in a way of uptrending market. A massive a bullish sentiment here. And off it goes through 105, and now it's pushing towards these areas up here. This is where was the kind of the intraday high, 112.60. Some brokers might have a different price depending on what type of product they're showing. They might be showing a futures contract or something else. But that's where we are with crude oil. Really, there's nothing else to be done here apart from look for a pullback for the entry. And I was looking for that pullback to happen over the past several trading sessions, and it didn't. So that's where we are. A really steep trend line here now, really steep trend line. So if you remember, I was telling you that the steeper the trend line, the more likely it is that it might break, i.e. the weaker it becomes. So this is quite often referred to as, in commodity trading, this is referred to as a J curve. So when you see a price action that resembles a letter J, there's a gap here as well, which wasn't filled, therefore continuation. These type of patterns, they normally precede a consolidation of some sort, possibly even a correction. But it would be crazy to think that shorting setups would be the appropriate thing to do here. As long as we have volatility, as long as we have geopolitical tensions causing a price of crude to move higher, the only thing that a disciplined trader can do is to wait for a pullback and buy the pullback or buy the breakout of resistance. Basically just go for long setups. Anything else is dangerous. Now I just have one position open right now. My position opened, I had a limit order. I was long, sorry, not long, I was looking to go long dollar yen, and I'll show you that position right now. Okay, so this is where I am with dollar yen. So I've literally just got filled here with short dollar. Sorry, I meant to say short. Short dollar. I'm in here. My stop is above. My stop is currently at 115.95. So I'm risking about 50 points on this trade. That's my risk, and I would like to take profit down here at 114.50. So 50 points of risk for potentially 100 points of gain. This is currently a losing position. It's a small losing position, but I'm in this trade right now. So this literally just happened a couple seconds ago. I had an order and that was filled. So let me show you. So here we go. That's where I got in. And if I go down to 5-minute candle, you can see it's in that 5-minute candle there as well. So let's see. I could be wrong here, but all this talk about inflation that's caused by geopolitical tensions and possibly hesitancy by Fed to hike rates as fast as everybody else is expecting and so on might cause a US dollar to soften a bit. But that's where we are. The last thing that I was talking about earlier on, which I wanted to show you as well, is FTSE. FTSE is potentially breaking out of this continuation pattern. So we have one significant touch here. Second, if this candle breaks through here and closes above this previous swing highs at 4,500, 7,400, that would likely trigger the extension to the upside, and that extension to the upside could be as big as this many points, potentially targeting this swing high here, 7,500, so 100 points higher. Breakout above that level, potentially even 75.57. I have another limit order 76.20 just because I'm greedy, but but that's where I am. I'm in this trade already, and I'm happy with this, and I'm just leaving this open. I'm leaving this open. This is a good trade so far. Okay, this is a good trade so far. And I will finish on that as well. So that's where the entry is, that's where the stop is. So currently I'm going to move, what I'm going to do is I'm going to move my stop a little bit higher to lock in about 37.5 points, 37.5 points on this trade. 7,500, 74.40, 75.57 on the upside, 76.20. They're all good levels, all very, very good levels for potentially profit taking. 76.20 would be up here. If that happens, I would be ecstatic. I would be ecstatic with this trade. Really would be. Okay, guys, it was lovely, lovely, lovely talking to you all. So cool. Bhavesh, I'm not here to promote any broker. So you make your own research, evaluation, make sure that you get the trading platform that suits your needs. Because if I tell you I trade with a particular broker, it could be too expensive for you. So it depends how you trade. If you're looking for a firstly, you need to find the broker that's well regulated. That's the first thing. And I don't want to kind of bore anybody with this stuff, but regulation is the key. So you want to make sure that your money is safe. And the other thing is, what are the trading costs? So if you're scalping and if you're trading a lot, then each trade costs you some money, either in commission or in spread that you're paying in buying and selling and so on. So you want to find a broker that's not just bamboozling you with functionality that you might want. You might just need maybe a basic functionality, but with tight trading costs and a good regulation. And that's a good start. For people with a small accounts, that's a good start. So make sure you do your own research and find out the broker that suits you. Firstly, that gives you the access to markets that you want to trade. Because it's pointless saying go for that particular broker, and that could be a complete overkill for somebody with a small account, inexperience, or maybe the trading cost for a particular market that they want to trade, if it's perceived to be illiquid or not frequently traded, could be too much. So your potential profits will be eaten in your trading costs. So that's what it is. So I'm staying away from it. That's my kind of feedback on your question regarding brokers. Make sure you find somebody you trust who's well regulated and gives you access to the markets that you want to trade and gives you good trading cost. Offers good trading cost. Okay, guys, it was lovely, lovely, lovely talking to you all. I am stopping the broadcast right now, so I'll be back with you tomorrow. In the meantime, stay safe, happy trading, and I'll speak to you all soon. Bye for now. Thanks for watching.